Welcome to a very special edition of the Bank Tellers. Today, I'm delighted to say we are joined by Jonathan Levin, co-founder and CEO of Chainalysis. Hey, Jonathan, how are you doing?
Yeah, doing great, Mickey. Thanks for having me.
Thanks for joining us at a very interesting time for the world of DeFi and TradFi. It feels like these two worlds are really coming together like never before. How are you guys at Chainalysis seeing the world of DeFi and TradFi and that intersection playing out, especially over the past few months?
Yeah, there's a lot of changes. Obviously, the regulatory environment in the US has become a lot more favorable to traditional institutions actually getting involved in crypto and DeFi. And I think that there is a lot of interest in the advent of stablecoins and the Genius bill, which has been passed, that creates a federal framework for stablecoins. And so, really, the world of finance that runs on crypto rails is now open for institutions to start thinking about. We at Chainalysis, we provide a data platform for anyone that is placing transactions on the blockchain so that they can protect their transactions. And that applies whether you work in TradFi or DeFi. And so we get this really unique view, which is that we get to work with everyone from the protocol engineers to the largest traditional financial institutions and government agencies to make sure that everyone has the same understanding about movements of money on chain. And that's something that, we are excited to bring to market now across both industry players and traditional finance.
Yeah, I think Chainalysis, as you guys said, you're fundamentally a blockchain analytics company, but you're neither just a DeFi player or a TradFi business itself. And perhaps more interestingly for our listeners too, in the context of this conversation, you guys are actually fundamentally a bridge between these two worlds of traditional finance, DeFi, but also other stakeholders like regulators, law enforcement, and so forth. Over the past few months, especially with the new US administration coming in, the regulatory landscape, as you said, Jonathan, has been particularly favorable in the US relative to previous years. Has that surprised you, the amount of engagement there has been as a result of that, in terms of it feels like, when you go on LinkedIn, even when you're kind of reading any traditional media, there's a lot more conversation about DeFi, and in particular, of course, stablecoins. Has that kind of level of activity been at all surprising to you guys at Chainalysis, or how are you actually kind of interpreting what's going on?
Yeah, I would say that we're still in a phase where there's a lot of interest, there's a lot of conversation, there's a lot of strategizing about what are the best ways for people to enter. Some of the larger financial institutions that have entered are already running sort of significant businesses in the space, and you've seen Stripe be very active. You've seen PayPal launching payments to all of its merchants on that front. You've seen the BlackRocks and Apollos of the world make big plays inside the crypto space. And so I think that there is certain fast movers that have taken actions that have real businesses that are driving real revenue from this space. And then there are a lot of the industry which is, trying to figure out what is their strategy for engaging with this technology, thinking about the business models, thinking about the use cases for that. So I think that I haven't been surprised by the level of conversation and the level of activity. I think that even today we see actually people trying out a lot of different things and throwing stuff at the wall to see.
It's interesting that you mentioned Stripe, and in many ways, Stripe has been a really big player in what the kind of most recent wave of interest in this DeFi or digital asset world, especially with the acquisition of Bridge back in last October. In terms of from the more established financial institutions, those that are not even seen as the kind of digitally native upstarts or scaled up players like Stripe, has there been a real change in terms of interest too, in terms of engagement and in terms of like, conversations you guys are at Chainalysis are having from these really established traditional financial players and how they want to kind of, get involved in this space?
Yeah, I mean, you've seen a lot of stuff happen, right? I mean, everyone from, JP Morgan making it possible to actually put, assets on a blockchain to the other sort of players like Morgan Stanley and E-Trade and stuff like that, thinking about, being able to transact in digital assets. And, I think that that's very clear that now people are seeing real potential for crypto rails to be foundational to the way that markets are really going to function moving forward. And it's broader than just an investment opportunity for retail or for institutional. And it becomes a lot more of a conversation around, what are the ways in which crypto technology is going to actually underpin financial services in the future. That's a conversation that I think has happened a lot faster than what people would have expected. And the foundation of that has been the Genius Act and the ability for people in the United States to think about actually having money movement on chain under a federal framework, which then unlocks a lot of the opportunities that until that point weren't actually available for traditional finance.
Absolutely. The- I think the Genius Act obviously has been seen as we've seen the interest and we've seen the kind of excitement that having some type of legal clarity has enabled. A lot of that, a lot of the Genius Act conversation seems to be centered around the stablecoin piece in particular. But from the conversations you're having and as you're seeing the space develop, where are the real areas of excitement traditional financial players are looking to when it comes to digital assets and blockchain and digital asset technology as a foundational layer for the future of financial services?
I think that when you look at the ways in which traditional finance are thinking about it, they think about it both on what are the ways that this impacts all of their existing business lines. And so they have strategy teams that are looking across. So what does this mean for our custody business? What does this mean for our institutional services business? What does this mean for our FX business? And really, they go through and they do a pretty comprehensive strategy review about how this technology impacts their existing business units. And then there's also largely a digital assets team that is thinking about what are the ways in which this creates an opportunity for new products, new strategic opportunities for the firm, maybe slightly longer term, that is, again, thinking about maybe even looking for inspiration from some of the businesses inside the crypto space about what their business model looks like and how do we think about integrating that into a traditional firm. We see a lot of interest around consortium models around stablecoins as an interesting new opportunity. They look at the revenue that's being created from, Tether, and they look at the market capitalization of Circle today. And that means that this is something that's really exciting for traditional financial players to think about what does their opportunity look like within that and how do they best capture that opportunity. I think that there is very much at this point a feeling that they need to do something. They need to start somewhere. They need to put in place the basic infrastructure. They need to have a workforce that understands it, that understands how to monitor for risk, how to think about the cybersecurity implications of it. And so, we're seeing a lot more engagement with Chainalysis as those institutions are coming in and thinking about their strategy within this market.
And with a company that's really like at that kind of sharp edge of providing the insights and data and analytics into blockchain flows of currency and money movement in this kind of growing space. What are some of the biggest challenges that TradFi players are running into when it comes to being able to take advantage of all of these kind of opportunities that blockchain and digital assets and the Genius Act and so forth offers? Is there anything that you're kind of seeing where these TradFi players need to kind of, maybe change things or what they're struggling with?
Yeah, I think that the fundamental challenge that is different between traditional financial assets and digital assets is the type of infrastructure you need around cybersecurity and risk management. I think that everyone in traditional finance can understand what a bond looks like. They can understand what a swap is. They can understand all of the products that exist in DeFi and what crypto is offering. What they haven't managed to do yet is have the infrastructure around how do the risk management functions, how does the cybersecurity work, how does anti-money laundering work for this new industry and this new foundational layer of technology. And that's something that is core to what we do at Chainalysis, is that we provide the observability that they need to have for any on-chain movement so that they can get comfortable with the cybersecurity risks. They can get comfortable with building an AML program that will meet the expectations of their regulators, and that we can prevent fraud and scams from impacting their business operations. And so really, that is the missing piece for them to actually build the products and services that their customers are asking.
And for that missing piece, where does something like a legislative structure like the Genius Act fit into it? Is it the starting point of being able to answer some of those, or is it actually what was needed? So is there more work that needs to be done from a legal perspective, at least in the US, for instance, or this is what we needed and now it's going to, unlock new waves of engagement?
Yeah, I think it is actually a starting point to what you're saying, is that actually after the Genius Act, it then goes into the regulatory environment and guidance comes out and specific rules are written. And that is going to be a bit of a process. And so that will take some time. But fundamentally, what it does is it is the starting gun. It starts the clock. It says, now there is a race that's on between the players to actually engage with this technology. And so I think that when the legislation comes out, this is a sign that for the foreseeable future, this is something that you're going to be able to invest against. This is something that you can actually spend time with your teams building towards, because the overall framework is clear and the specific guidance on what is actually required is going to be fleshed out, but that's inevitable. So that is really how I see the Genius Act, and how, again, progress on market structure will have is that it is the starting block that then everyone is in the race together.
It's interesting, like looking at this space, that like legislation has become such a fundamental kind of part of unlocking the next growth of DeFi growth. Outside of, I guess, the legislative piece, as you guys are continuously engaging with the TradFi space and stakeholders across the spectrum, what misconceptions remain in TradFi with respect to DeFi and the opportunities the technology presents, if there are any?
Yeah, there are still misconceptions. I think one of the misconceptions that people have is that the controls around money laundering are inferior in some sense in a crypto world, with the idea of us being able to hold assets ourselves than in traditional institutions. What we've demonstrated at Chainalysis over the last 10 years is that that's not the case, is that actually empirically the success of law enforcement and industry to mitigate the risks of the types of crimes that we care about is actually being more effective in the DeFi and crypto worlds than it has been in the traditional finance sector. And so I think that this is like a big misconception that is still something that I spend my time educating both policymakers and traditional institutions about, which is we can actually, and we have demonstrated that it is actually more effective to monitor on-chain transactions and take action against criminal actors in a crypto world than it is in a traditional finance world. Just to get to a little bit more detail inside of that, if you think about a traditional financial system, you have nation states that govern the rules of their each individual financial system. And when you think about the role of a stablecoin, which is a truly global representation of a banknote, you actually can see that the ability to actually freeze that banknote or freeze that money is possible domestically versus internationally. And in a normal traditional financial system, you would have to go across national boundaries to actually go and freeze or seize money in those countries. And if you have a domestic issuer of a stablecoin, you actually are able to compel them to freeze and seize assets no matter where they are in the world. And this is something that, again, not very well understood in traditional finance, now becoming better understood now that the Genius Act has been passed. And it really opens up the possibility for there to be a lot more financial innovation with the same amount of financial controls, if not better financial controls against illicit activity.
And I think that's so fascinating because I think certainly from conversations I've had and from just like, looking at the industry, it's certainly true that like the perception seems to be that the blockchain or DeFi space suffers a lot more from being able to do the necessary regulatory checks and so forth. I guess why do you think that misconception? Why is there that misconception? Because it sounds like fundamentally a pretty significant one in terms of also, for TradFi players in particular, in terms of precluding them, or for this point at least, from precluding them from being able to take advantage of the opportunities this technology presents. Well, why has this misconception, stayed around for so long?
I think that the issue is that the success of the technology to actually mitigate these risks actually results in headlines. And so, like, if you think about it, we've been very successful at partnering with law enforcement and traditional players to actually combat these threats. And so, a big takedown of a darknet market or a big takedown against a terrorist organization is written about, and it's written about in the news. And so people then form the perception that, this is actually something that is very frequent and, happens in crypto, and it sort of matches their preconceived notion that this new thing must be getting abused by these illicit actors. And so, frankly, like, even the more successful we are at actually mitigating some of those risks, actually sort of feeds the narrative that it is being used for all of those things, which presents a bigger risk. But actually, if you really think about it, the total amount of criminal forfeiture inside the crypto space has actually grown bigger than the forfeiture inside the traditional asset space, even though crypto is still a fraction of the size of traditional finance.
Yeah, that's such an interesting, I guess, outcome in terms of, and it makes complete sense. I guess a question as a result of that is on the inverse side of it, from within the DeFi space, what are the kind of similar misconceptions that fester there from what you're seeing?
Yeah, I think that there are some basic misconceptions about the traditional financial players and how they make money or how these products really work at the end of the day. I think that when you've looked at it, the DeFi industry in general has built from sort of the technology first approach upwards, and a lot of it has been experimentation with what is the art of the possible using this technology rather than from a sort of product centric point of view about what consumers want or what institutions want and what are the ways in which they value those services. And so I think that there is still a bit of a bridge to be crossed between the different sides of it, which is, traditional financial institutions or even fintechs that have large scale distribution and understand their customers really well, marrying technologists primarily in the DeFi realm that understand the technology really well, but don't understand all of the intricacies about financial markets and financial products. And so bringing those worlds together will create a new generation of financial products that actually suit the needs of consumers. And it takes DeFi out of a crypto native world and into the world of being infrastructure for financial products.
I think that tracks so so well to what we're seeing too, right? Like I think the stablecoin piece is probably the best example of something like that, where the technology use case is becoming more evident, and then from big fintechs and traditional financial service players that have that distribution and the need for like the benefits that stablecoins generate. It seems like that perfect marriage, and it seems like that's why stablecoins have really kind of been the dominant piece of what we're talking about over the past 18 months or so with respect to DeFi and TradFi. As I guess, if we're having this conversation in 5 years time and TradFi and DeFi are becoming more and more integrated, and that intersection is becoming a lot more, really just becoming, a lot more kind of integrated, for a lack of a better word. What would need to happen, do you think, to really drive that forward from this point on?
I think there's a couple of different components, and maybe I'll break it down into three components for you. Is that clearly there needs to be regulatory environment and regulatory frameworks in place for government agencies to actually oversee and regulate parts of that market. And that's evolving, and I think we're in a really solid trajectory with some of those things. And I think it also goes beyond just having crypto specific regulation. It's actually about making sure that crypto is integrated into conversations around market structure more broadly, and making sure that people feel comfortable in using crypto rails for those traditional financial products. That would need to happen. I think on the sort of technology side, there needs to be this integration between the tech stack of traditional financial institutions, their requirements around operational risk that they have to meet in order for themselves to get really comfortable and their customers to get comfortable. They need that visibility about what's happening on chain, and they need that robust infrastructure about protecting against risk in that way. And DeFi needs to mature their tech stack and make sure that they also have the level of controls and the tools that they're developing to help with the adoption of the technology in general. And then finally, in terms of product, I mean, I think that in order for DeFi to go mainstream and for this to really suit the traditional financial markets, the products that DeFi power have to be products that consumers really want to have. And I think that there's lots of versions of this, and it extends beyond just tokenizing equities or tokenizing different types of securities. And I think it goes into the fundamentals of, are consumers around the world able to earn yield or get a certain type of exposure that they were missing before, that they couldn't have got before. And I think that those products are coming to the market and they're gaining traction today. And I think that, if we're having this conversation in 5 years' time, it will look very different, that there are a sequence of products that allow consumers around the world to get that level of exposure and those types of access that weren't possible before with traditional finance.
Absolutely. And I think even with some of the kind of technological developments we're seeing with things like AI, the kind of continued globalization of workforces, clearly there are parts of the digital asset ecosystem that have very clear use cases now, more so than 10 years ago, and probably less so than in 5 years' time. Like, I know we're coming up to time, Jonathan. So I guess like really one more question from me. As you're looking to the future, I know over the past few years, there's been a few interesting pieces that have created this growing wave of change, right? Like whether it was the launch of like the crypto ETFs, and then with things like the Bridge acquisition by Stripe today, or recently the Genius Act. What is the next kind of phase of growth that you're really excited about in terms of integrating these two worlds of TradFi and DeFi together, and unlocking, the kind of vast potential and opportunities that lie there? Is there any areas that you're kind of keenly looking at, or you're, really excited about?
I think that, things change a lot when traditional financial institutions are really moving value across these networks. We are still in a world where there is a lot of the money movement on these networks driven by purely DeFi players or traditional crypto exchanges or traditional crypto players, rather than the major financial institutions, the global systemically important banks and stuff like that. Like, once they are starting to get comfortable to move money on the blockchain themselves and not necessarily through an intermediary, we get across the next phase of this industry. Those conversations are starting today, and you've seen JP Morgan take an initial step, and you've started to see like the sprouts of this. But that's really where, again, we enter a completely new phase of the industry, and an exciting time for Chainalysis and the broader industry in general.
Yeah, absolutely. It feels like, especially with some of the big traditional financial service players, the last few months, it feels like a who's list of players when it comes to engaging in this space. Well, thank you so much for your time today, Jonathan. It's been a really insightful conversation, and I'm sure our audience will have enjoyed it. Will we be seeing you in Vegas in a couple of weeks' time?
Yeah, I hope so. And hopefully, and I've been a big fan of Money 2020 for many years now. So yeah, would love to.
Awesome. Well, hopefully we'll catch up then, and we'll have a bunch of interesting conversations there on stage 2 around the intersection of DeFi and TradFi. Until then, thank you so much for your time. It's been a real pleasure getting to hear your insights.
Thanks, Mickey.
All right. Thank you.